Hello, dear traders worldwide. This is Gabriel today with another educational video about bullish candle patterns. Once again, welcome back to my channel, Forex.Real.Trader coaching sessions. And today we're going to talk about a very nice pattern, and this is the Tweezer Bottom. Okay, let's first understand the structure of this candle pattern. Basically, this is a bullish pattern, is a reversal candlestick that typically appears at the end of a downtrend. It consists of two consecutive candles with nearly or identical lows. It signals a potential trend reversal to the upside, right? Important thing to notice in here is that we can combine this one with the stochastics, and the behavior when they are combined is very accurate. Okay, again, I don't mean to say that we rely only on the pattern and the stochastics. No, we always rely on our trading plan. Let's see this thing here. As you can observe, we have the two candles here. Okay, we have these two candles. Okay, and we can interpret them in both ways. When they have the same, right, the same, in this case, is support. Remember that in a downtrend, okay, the opening of the bear candle is up and the close is lower. When we talk about the bullish candles, the opening is low and the close is high, right? In this particular pattern, we can understand it or interpret it as the same support, right? The same support in what? In the closing for the bear, right? And in the opening for the bull, okay? When we take into account the real body, okay? The real body. This is basically the best way to approach this pattern. Some traders also interpret it as the same support, the same close for the bear, and the same bull, but they take into account is the wick. If the wicks of both, right, the wicks, right, if the wicks are in the same support area, they count it as a valid tweezer button. In my particular case, I like to rely more on the real buy. So I am more inclined to this one here, the real buy. Okay. Let's see these patterns on our charts in order to identify the pattern on real charts. Check this out. I previously searched my charts in order to save time in the video. And I identified these patterns very often. That is a good thing with this one, right? You can see it very often, is reliable, okay? You can trust when you see this pattern. Of course, align with your trading plan, okay? Not only the tweezer button. We need to find other indicators, other signals to proceed. So here I have one. Here you can see another one, and here you can see another one. As you can see, it doesn't matter the size of the candles, right? For example, in this very pattern here, the candles are somehow mid-size, right? They are mid-size. But if we see, for instance, the previous pattern here, okay, you can see that one candle, in this case, the bear candle, is larger, right, is larger than the bull candle. But what do they have in common? That both have exactly the same support, right? And if we see the one that I'm going to show you in the analysis, this one here, okay, happens the contrary, right? So the contrary is that in this case, the larger candle is the bull candle and the small candle is the bear. But again, what they have in common is the same support. All right, so let's focus on this one, and then you will see that the same situation will be in agreement with the other patterns that I identified. Okay, the very first thing is, remember that in the psychology of this one is that it appears when there is a potential end of a downtrend. Okay, here I can see a clear uptrend, right? In fact, all this trend here is bull trend, okay? And here is going up. Here comes the correction, right? So here is a correction. And on the very correction, I spot it. So let's cross some lines here. If I use my crosshair, let me zoom in for you too. Okay, look at this. If I zoom in here, you see they are, the instruction is nearly the same opening and closing and opening, or exactly the same. In this case, is exactly the same. Look at this. So both of them, the bear closed at 1.41948, and the bull opened exactly at 1.41948. All right, that is a strong indicator that we are seeing in this very moment a tweezer bottom. Okay, that is the thing. And there is another interesting aspect. Let me trace the line in here for you too. And let's delete this one. Okay. Here. All right. So that is my first signal. They close and open exactly on the same support area. That is the first indicator. So, okay. I have now first, that is my first signal, that I have a valid, that is a valid tweezer top button, right? Okay, first, check. Second thing, it is at the end of the correction. Okay, it's going up, correcting. So it's signaling the end of my downtrend. All right, so potential. Remember that anything in Forex, anything in trading, stocks, futures, whatever, anything is for sure. Anything is for certain. Here's basically a analysis, right? It's an analysis that I'm working on in order to determine if the pattern here, this tweezer button, is valid or not. So in this case, there is a potential reversal to what? To bull. Okay. And now we can identify two other things. This pattern is very interesting to be also analyzed along with Fibonacci's. In this case, I always use my Fibonacci retracements. And curious enough, you can find this thing here, that the wick of the bear candle found support at the 61.8 Fibonacci level. Remember that the meaningful Fibonacci's are these ones here, are 61.8, 50, and 38.2. In this case, this line found support. Why? Because the price pierced it a little bit, but didn't cross it. Went back to the what? To the bull move. That is another thing. So, okay, so I have a third signal, right, that confirms that somehow the trend, the bear trend, is ending in order to give room for the bull move. Okay, now we have another very powerful tool, which is the stochastics. Remember that stochastics bears in mind two things: overbought or oversold. It's the same thing as the RSI. Okay, they are oscillators, so they work in the same line. Okay, so here we have, in this very moment of this tweezer button, I can see that there is an oversold region in the moment of the first candle. Check this out. Let's be clear here. In this moment of the red candle, the pattern is not completed yet. Again, I always work my analysis on the 15-minute, right? On the 15-minute time frame, right? So it means that for the completion of this pattern, I needed 30 minutes. So in this moment here, in this 15 minutes, there was an interesting observation. I can see that there is an overbought, right, zone here on my 20% area. Apart from that, after the 15 minutes of the first candle, when the second candle, I mean, the bull candle, formed and closed, in this moment, the behavior is very interesting because now the cross is effective. The bull line, I like to call him like that because this one is indicating on the stochastics that the sentiment changed from bear to bull, and the blue and the green line is above the red dotted line. That is an indication that now is bullish. So it's the overbought, the oversold movement now is coming up to the overbought area. So that was another confirmation, and that is very interesting in this pattern. Okay, now how to trade it. Now I have confirmation with my stochastics, right? Okay, let's suppose that I have my trading plan and everything is all consolidated, and I got these four confirmation signals. What is the next step? How to trade it. Okay, simple. What is the first rule? Patience. Patience about what? Hey, wait for the 30 minutes, right? Wait for the 30 minutes of completion of this pattern. Okay, so when you have observed that the bull candle has closed, it doesn't matter how high, right? Remember, the critical thing here is this. This is the observation, okay? All right, how to proceed? Okay, so my procedure will be like this. I'm going to enter or set my entry point around 2 or 3 pips above the closing of the bull candle, right? So that is my entry point. So let's say here, entry point. Okay, good. And let's set the color, blue color for the entry, right? So this is my entry point. Okay, remember, buy stops or buy limits, depending on the configuration of the market in that moment that allows you to place either limit or buy stop. Okay, later on in the course we will learn how to do that with real trades and things like that. Okay, now to be a valid trade, let's see how many pips I can risk here from my entry to my stop loss. I would set here 10 pips, risking 10 pips. Look at this. I would like to place it a little bit below the support level provided by the Fibonacci. All right. Why? Because that is going to give me more confidence. So I would set my stop loss here. So if I am risking, remember in the previous videos how we do the calculation. So if my ratio, always my ratio has to be 1 to 2, okay? Let me do this thing here. So my ratios, when I am setting my stops, could be 1 to 2, right? Or 1 to 3. Okay, if I am risking here 10 pips in my stop loss, it means that my take profit should be 20 pips, right? Or if I am risking here 10 pips in my stop loss, my take profit must be or should be 30 pips, right? That is a proper ratio, 1 to 2, 1 to 3. All right. So if I'm risking now in this trade, I'm risking 10 pips. So where are my 30 pips or my 20? Okay. It would be around, look at this, slightly above the previous higher high. And that is good because it's not too aggressive. I am being realistic, right? So I would set my take profit slightly above the previous higher high in order to attain or looking for 20 pips. Look at the behavior of this one. Okay, when I activated, right, when I activated my trade, or the market, sorry, when the market activated, triggered my trade, it was around this area, right? It was when I place it here, the next candle activated, not this one. The one that triggers my trade is not this one because this one was closed. So this one is the one that triggers my trade. When it was triggered, okay, it came up. Here was a moment of consolidation. Then it came down here, didn't touch my stop loss. So this is my safe zone, no problem. So it was around 5 pips negative. Okay, perfect. Then it went back up, and reached my take profit, right? So that's it. And look at this. Look at the behavior of my stochastic. The stochastic was also going up, right? So this is a very interesting observation for the Tweezer button. If you observe the others that I analyzed in here, that I spotted, you can also see similar behaviors, right? Similar behaviors in what sense? Look at this. Here is my Tweezer button. Exactly. Well, this one is not that exact as the previous one, but it's within the rule. It's nearly the same close and open, right? Here. And look at the behavior of the stochastics. The stochastics were what? Were in the oversold area. That is interesting, all right? And finally, the final Tweezer button that I found for this video was this one. Look at this. Pretty similar, okay? When you are detected here, but here with the confirmation, there was the cross here on the stochastics, and the direction was boom, right? So that's basically my dear traders, how we can identify and spot the Tweezer buttons. Of course, there are things that we have to take into account. As with any other pattern, we can always find the potential of false breakouts. For this reason, always remember to be disciplined and only trade according to your trading plan and taking into account other indicators, other signals in order to proceed, right? Always join these Tweezer buttons with stochastics. That is a must, right? When we are trading this pattern. Okay, just a little reminder. Okay, the materials that I use on this video are based on different books, different resources, and of course the experience that I have working with this kind of analysis. Let me show you the book. Probably in previous videos I showed you, but for some reason it's not here now. Okay. Here's the book, right? This is one of my favorites, right? I have many books about trading, but I found this one for technical analysis as a very interesting tool. So remember, if you like my videos, if you find these interesting and you find that the potential is good, so please subscribe, share, and like. Very good. Thank you very much. See you in the next video.